In today's Testing Your Strategy live video, or Pimp My Strategy, as some people have renamed this playlist too, we're going to be going over a modified 5-day 5 EMA strategy, which you've probably seen the base format of from my channel several times. I presented that as just like a super simplistic strategy to kind of work off of, never really presenting it as fully optimized. And in today's video, we have, who was this? This was Tristram here, and he has actually modified it, and it got my mind thinking. And in fact, I found a really serendipitous improvement for this strategy, which completely changes the game, at least for myself. But I'll present it to you exactly how he wanted it as well. So first, I'll show you the results right here. Of course, it's a massive winner. It has these humongous steps up in terms of P&L, and when it's losing, it basically treads water. So this is a strategy that is effectively designed to catch on to big trending moves and not let go of them. And then most importantly, when it's not its time to play in the sun, it just doesn't lose money, which is very nice. So let's go through his criteria, and then I'll show you the change that I made. And again, it was like just by complete luck, complete happenstance that I just misunderstood what the hell he was saying. But Tristram here is putting this strategy Bitcoin on Bybit. We're going to test it on the index just so we get more information here. The 5-day time frame, and it is going to be opening a position when the 5-day time frame closes above the 5 EMA. So in this particular chart here, I have that marked off as the red moving average, as you can see. And of course, we're on the 5-day chart as well. And he's also adding a condition here for the BBWP being smaller than or less than or equal to 20.81. So a very specific number right there. I do get a little bit, on edge when I see something that's like that specific. But I'm going to run with it nonetheless, because there actually was a significant improvement in hit rate by including this. Then he is going over a fixed stop loss by percentage, and that's going to be 6.3% from the open, so that's quite easy to do. And he is going to expand it to work on multiple entries as well, so fair enough. And then he is going to have a little bit more of a complicated profit-taking scheme, and this is actually where I misunderstood him at first. I'm like recovering still from this surgery. By the way, I'm gonna post this video like much further away from now, but I'm recovering from the surgery right now, and my brain is like, I feel like it's at 50%, which is not good, because even 100% isn't fucking enough sometimes. But in this case, he's looking at a 12.6 P&L move stop loss to break even. Okay, that part we got, meaning that once his position is about 12.60% in his favor, we take that stop loss and we put it to break even. So we ain't making losses there. Then he's going to take 30% profit when he is at 18.90% P&L and move the stop loss to 6.3% P&L. This actually we cannot do, unfortunately, with the skeleton key. And by the way, we're going to be setting up all of this with the Quant Prime service as always. So if you want to test it out for yourself, using this tool to set up all sorts of crazy strategies such as this, well, you can find that in the link description below for Teachable. We'll continue on over here. Anyways, he's going to take another 30% profit when price is 25.2% in his favor, and then initiate a trailing stop loss with 6.3% trail. So unfortunately, these sort of more complicated things here we can kind of do, but we can't fully do the take profit, then moving that into a stop loss with a trailing stop loss, this sort of thing. That's actually a little bit out of the context of the skeleton key. But for most other things we can kind of do. And I'm actually glad that he brought this up, or I'm glad that you brought this up, Tristan, if you're watching this in the future, because, well, there was a humongous improvement, at least in my opinion, that I made to this that I think really is cool and something that actually we'll probably use in the future. But let's first give him his due diligence. As close as I could get this one, it looked something like this. It was winning nearly every trade, basically 95.38% over the full history of Bitcoin, 303 trades, which is pretty fucking crazy, right? But of course, remember that there's multiple entries in this one. It's pyramiding into positions and also pyramiding out. So it is, that number is kind of inflated, honestly, here. And if you look at the equity curve, there's a humongous step up over these first few trades here in like the first year of Bitcoin. And I don't think that that's super realistic to keep keep in, obviously. So I'm going to start from the time, let's go from 2017 maybe. January 1st from 2017 to this is being recorded on the 17th of June. Let's see what this one prints out, and then I shall show you the changes that I made. Or it's not really changes that I made, it's like a mistake that I made in understanding it. And then I was like, okay, that's pretty fucking cool. And yeah, I mean, this one, again, still doing its job in stepping up, when it wants to step up. Let me just get rid of my face for a moment here. Stepping up when it wants to step up. No, stepping up when the conditions arise for that, and then really just not losing, any of that money, or very, very small amounts when things are not in favor, the conditions are not favorable. But, I felt that we could do a little bit better than this. So what I'm going to do here, again, is I want to focus on smoothing out the equity curve. That's always my main priority with these things, because I want to future-proof it as much as possible. And to do like a forwards test on a time frame like this with Bitcoin, it's actually not going to be super useful, because there's just you just don't get enough iterations to make much sense out of it. But here's what I'll show you that I did. So I kept, like I said, most things the same. BBWP condition is in there right here as a threshold. Of course, we went over to the entry condition for the closure above the, in this case, MA1 is going to be that 5 EMA. So that's your entry. We also had a closure condition for when the close is less than the 5 EMA right here. That's one of the ways that I could, lose or take profit as well, actually. And then from there, I actually made just one other change. Maybe we could even play around with it, but what I misunderstood at first was the take profit, the maximum take profit. Let me get rid of this for now, just to show this. But the maximum take profit I actually had at 30% is how I misunderstood that. So if I enable this again, instead of like a, multiple exits, it looks something like this. And that is, in my opinion, a really fucking good equity curve. Now you'll notice that the profitable trade rate goes down significantly to just over 56%. Total trades goes down as well. But this sort of equity curve is consistently moving up and to the right. And really not taking like significant drawdowns. So when I see something like this, where you're having like really consistent returns and the drawdowns are not bad, you can leverage up, you can size up on something like this. I wouldn't go over something crazy like 10x, but around 5x, you're probably okay. I mean, you're okay. I mean, honestly, you're probably okay at 15x anyways, because you do have a stop loss by percent at just over 6%. But looking at this here, this is a strategy that I'd look at as actually getting better in the future. Look at how it's taken off in the last couple of years. It's actually increased its curvature. It's been pretty steady all the way around, but especially in recent times, it has been taking advantage of this like it's its job, because that is its job, obviously. Now, here's the thing, and what I actually did not prepare for on this video, but I want to play around with the maximum take percentage profit here. I want to try a little bit on each side, but that's what I just randomly found, and I wanted to record as soon as I kind of found that. And then make the rest of this video just in the moment, just you and me. And yeah, when we actually move that take profit down, as expected, the total P&L goes down. Even the profitable trade rate goes down a little bit as well. So that is not an improvement. We actually should probably try it upwards. So let's try 35%. Yeah, this actually improving it a little bit, I do think. Let me just go back to 30 even and see what the measurements would be. Yeah, okay, 30% and 35 are about the same, but 30, I mean, it's more or less the same. Maybe we try like 31. Again, I don't like getting super in the weeds with these numbers here. The more like crazy that you get with adding decimal places and whatnot, the more and more that you're probably overfitting. But 31 is a whole integer, and that's actually making things not as great. Let's try 29. But I'm probably going to stick with 30. It's very, very random and just lucky that I landed on that to begin with. But that's what it is a lot of the time when backtesting strategies and figuring something out. A lot of it is just, it's a lot of trial and error, and it's a lot. And when you do get it right, especially on the first time, it's fucking luck, man. Is what it really is. But yeah, this one also not working too well. I'm going to try something just completely out of the ordinary here, or just completely out of left field. 20%, that reduces everything in a not so ideal manner. Let's go to 40%, go to the other side and see how this one does. I imagine the total P&L will actually go down here. So yeah, 30, funnily enough, the one that I landed on at the very, very beginning does seem to be the right one to go with. And honestly, from there, I would really not change this one. Let's go into the trade analysis for this and see how it has performed on a per trade basis. And the average winning trade is actually 21.37%. So you're probably wondering, how the fuck could that possibly be? Remember, there's two exit conditions here. One of them is with a closure on the 5-day time frame below the 5 EMA. So that can change around the results, of course, and that is what's happening here, it seems like. And then two would be that maximum take profit by percentage, which is 30%. So yeah, and then the average losing trade, again, remember we have a maximum stop loss by percentage at just over 6%, but because that 5 EMA condition there for the exit can also close it at a slightly less loss, well, that actually gets broadened down, and so you have a humongous spread here between your average winning trade and your average losing trade. And whenever I see something like this, like my eyes are wide fucking open. I love this is what I'm looking for. This is my shit. This is what I like. As far as how long you're in these trades, it seems like it is in the losing trades a lot less long than it is in those winning trades. Those winning trades need some time to breathe at 9 bars on average on a 5-day time frame. That's 45 days. The average amount of bars in losing trades is three bars, so that would be 15 days. So yeah, it loses those losers really, really quickly and gives it space to once again win for the winners. Maybe the other thing I could probably play around with would be the BBWP. So let's just see. I don't want to fuck around with this one too much, but maybe we'll just try 20 even. Like, I can't imagine it's going to make a humongous difference, to be honest. What the? Oh, I just made it 200. So that's every time. Okay, another serendipitous find here. You'll notice, of course, that the P&L goes up by a metric shit ton. We do lose our curvature, unfortunately, but it still is actually pretty acceptable here. I know a lot of people are completely fine with this, and this is fine. And I actually just completely fucked it up here because I didn't even put 20, I put 200. So basically this is the same as just turning off that condition. So obviously your profitable trade rate goes down a lot. So this is a preference, call, of course. But 45% versus what I had earlier at 55%, and then what he had at like 95% or 97%, it was crazy. Either which way, it just depends on what you're aiming for. But looking at this, I mean, shit, just keep that, man. But let's try to actually make it better. Maybe let's go to 50 and let's kind of work our way around these whole integers and see what we can come up with. Yeah, 50. We're getting more iterations here. So in my opinion, I like to solve for total P&L while also having relatively low drawdowns. And by the way, the max equity drawdown here, as the name would imply, is based off of equity. It's not like a per trade thing. If you're looking at this and saying, holy shit, 32%, that's a lot. No, it's not like that. And also that's based off of the properties tabs here, because I have the initial capital set at 500,000 and then position size at 100,000. So these are like is that 50,000 or 500,000? Let's go to 500,000. Either which way, it's not going to change anything, but it actually will bring that max equity drawdown down significantly. Anyways, back onto topic. My point is that those numbers are probably not going to be like relatable. If you're looking for the per trade basis, you need to go through the list of trades, and from there you can actually just export that out into Excel or Google Sheets, and then actually come up with the average drawdown that a trade saw in particular. So, anyways, that's just to answer a common question. Let's try a few other numbers here, just see what's up. 40 actually brings those results down. So it's very clear that this setup is benefiting from more entries than not, because there is an edge there indeed. Okay, 30 actually made things go up and made our profitable trade rate go up and smoothed out this curve. Not bad. Again, another thing that you might be interested in testing yourself. 25, these are really just preference calls at this point though. 25, again, a little bit worse results, but still pretty good, pretty acceptable, I would say. 20, I don't think we're going to go below 20. Yeah, we're not going to go below 20 in this case. Personally, I would actually just take the BBWP condition off, but we'll go higher as well. Just see, you know, you never know until you actually try, but we'll see. Yeah, 60, not better. At least not better than just not having it at all. 70 is good, it's bad. Again, better top end metrics. I would say 80, but still, you know, taking it off entirely is, in my opinion, the way to go with this one. Yeah, I mean 90, like we can try, but I don't think it's going to be a humongous difference here. Yeah, getting closer to just having it off in general. Maybe this one's slightly better in terms of profitable trade rate. Let's see, 44.5 versus 45. So it actually gets better when you take that off. So yeah, I would take it off. Take it off, get naked on these charts. And this one's pretty active for a 5-day strategy. Like, yeah, I think that this is actually really impressive right here. I really, really like this one. So I'm going to start working on this as like a motor for my strategy, because this is I like what he's done. I appreciate you bringing this up, Mr. Tristram, and I understand that I did not get your strategy perfectly in the way that you defined it. That's really just due to the limitations of the skeleton key, or perhaps my interpretation of it. Maybe a little bit of both, but yeah, in terms of this, I'm very happy you brought it up, because now I found something that I'm pretty happy about too. All right, I'll end it on that note. As always, take care, much love, and by the way, if you want to post your strategy for testing, all you need to do is join the Discord link in the description below. It's free to do, by the way. Just go to the Test Your Strategy forum post and follow the directions in the How to Submit Your Strategy post, and then you can submit it, and it's all good from there. All right. With that said, I'd like to wish everyone the best. Take care, much love, and see you hopefully in the next one.